There we go. Good deal. Welcome, welcome. Thank you for joining us tonight. I think all of you know, I am Angela. I'm with Young Living. I've been with Young Living for 10 years, a little over 10 years, actually. It was 10 years in April. And last year in 2024, Young Living created a partnership with a company called Clearwater, which is a health share company that provides healthcare to people. And so that's what we're going to be talking about tonight is this program. And I'll share examples of how it's helped my family and kind of give a little introduction of what it is and what it's about. So, a health share is a community of individuals that are helping each other cover medical expenses. And with Clearwater, we are, or they are, a nonprofit. So, this is a really big thing that helps to keep the monthly premiums low so that there is less costs and more of the money that we pay on premiums is actually shared among each other to help keep those premiums low. So, it's a really big thing that I talk about a lot because of how it has helped us to have lower premiums and actually better medical care and coverage. So, the one thing that I do like to talk about is some of the differences, but something that if you've had traditional health insurance, then you're used to having a deductible and then a max out of pocket. With the health share, you only have one fee or thing that's called an annual max. So you choose how much you're comfortable covering of your medical expenses. And then after that, the health share kicks in to cover typically on pretty much anything 100% of medical expenses. And those three options are $1,000 in a year, 2,500 or 5,000. We'll talk about those later because I have like pricing and stuff that I pull up, but I like to introduce that and share that that's what it is. So talking about like kind of what are the differences, comparing the two. Health insurance is a for-profit business. I worked in the medical field for 12 years before leaving in August of 2020. I have seen behind the scenes of how it's almost, I would say, like a racket. That's a nice way to say it. Of money and greed and that type of thing. With the health share being classified as a nonprofit, there are limits to the amount of money that the company can make or keep as profit and still be classified that and have those benefits. So it's more about focused on us as the members, keeping our costs low and serving us so that we stay and become members so that they can continue to serve more and more people. There's over 60,000 members, and that number is actually from 2024 in the fall. So it might be old because I know that since the partnership with Young Living, they've been growing quite a lot. So it's been a really good thing. A couple of other things that with the health share that is important to know or be aware of is that it's an open network of providers. So you don't have to go and look at a list and see if the doctor that you want to go to is approved or has better coverage or anything like that. You can go to anyone. The coverages are what they are, and you're going to be able to choose that. So if you're going to a chiropractor, choose any one. If you're going to a medical family practitioner, you can choose any one that you want to, and the coverages are the same. A lot of times with traditional health insurance, it's limited. You have to check a list, see if they're in network. If they're out of network, you have to pay more, that kind of thing. So again, another pretty big difference. I also kind of explained that already the annual max versus deductibles and copays and that kind of thing. With the health share, claims are rarely denied. The only time that I have seen a claim get denied, and it's only been a couple, is when somebody had a pre-existing condition and then they asked for it to be covered. So we always want to look at if you have any pre-existing health conditions, what those are, or what limitations might be surrounding those. So that going into it if there's going to be any specific limitations that might not be covered. And one of the things I really like is that it puts decisions back into our hands, like it really allows us to take control, especially with the open network of providers. That's a really big deal for a lot of people to be able to see who they want to see. This is my family's example. So, like I said, we'll dive into like what are the prices, what are the things looking at. The larger your family, usually the more savings you get or receive because it doesn't you don't have to pay additional fees, monthly premiums for each individual when it's beyond the family of like 3 or 4. That's just a family rate that you get. So families that have 4, 5, 6 kids get a lot of benefit. So my family, when we had traditional health insurance, we were with Regents. We were paying over $1,500 a month, and now we are paying $955 a month. And this lists some of the comparisons for us. So for us on chiropractic, we had 12 visits a year per person. And now with the health share, we have 24 visits a year, and that can be for chiropractic or acupuncture. And it's covered up to or reimbursed up to $175 per appointment. So that's a pretty big deal. And our out-of-pocket costs for individual went from $8,100 per year down to $2,500. So I chose the middle plan that I mentioned earlier for my family. And then the family out-of-pocket expenses is also cut in half or a little more than half. So with my traditional insurance, we didn't have the option to go to acupuncture. So when I went to acupuncture when my son was overdue 2.5 years ago, I paid out of pocket, I think it was like $150, 155, and I went 3 different times. So it got pretty expensive because I had traditional health insurance and that wasn't seen as a covered type of visit. Telemedicine is free. I had that free with my insurance, so that's pretty kind of comparable, apples to apples with most people. But the mental health telehealth, so online mental health care, is also free. I actually had never heard of that before, and I have a couple of friends who have used it and said it was really easy to schedule, scheduling follow-ups, and like it. So one friend used it after a close family member passed away. So for kind of like that trauma of getting through those first few weeks or months. And then another friend uses it for mental health regularly, just kind of dealing with life situations. She's a business owner and has a lot of stress, and she uses it just for, regular types of appointments or kind of ongoing type of care. And then one of the things that I love about it is the supplement coverage. So with traditional health insurance, supplements are not covered. But I've always been natural, crunchy, organic, healthy person. And I've been with Young Living for 10 years, right? That's what we're all about. With this program, I now get reimbursed $75 a month for any supplements or essential oils that I purchase from Young Living. I just submit my receipt and then the money gets into my bank account reimbursed. Right now, it's usually about a week to 10 days. So I want to dive deeper into the chiropractic and acupuncture because this is a huge benefit that a lot of people really, really like, and it's really, really good. So any of the natural or holistic options that I'll show you, you pay as a cash pay patient when you're at the appointment, get a receipt, you submit that receipt and get reimbursed. For chiropractic, it's up to or acupuncture, either one, it's up to $175 of reimbursement per visit. And so, if you think about it, going to the chiropractor or a follow-up acupuncture appointment, you're not going to spend that much money, but it includes add-on services. So, chiropractic is probably somewhere between $40 and $60 per visit for your like normal visits. But if you add on like light therapy, if you add on a massage, any type of treatment that's added on at the time of visit is included and part of that reimbursement. So you could spend $100 on a massage at the time of your chiropractic adjustment and say your adjustment's $60, submit that receipt for $160 and get reimbursed on that. You pay the first $35, but then you'd be reimbursed after that. So really, really nice. Absolutely love it and feel like that's a good option for a lot of people to have ongoing care for that type of thing. So this is an introduction of the 3 types of plans that we have. So first one in the first green box is called ClearShare. That is major medical coverage only. So this is like if you have emergencies or you fall and break a bone and need a surgery to repair it, something like that. So your large items, and that can be a standalone item, or you can combine it with the holistic, which is the next option. You can do the holistic on its own as well. The holistic is for people who want to be proactive about their healthcare. So that's going to be the chiropractic visits, the acupuncture, your doctor visits for like an annual physical, that type of thing. And then this is what covers the holistic or the essential oil and supplement reimbursement. And this one can be good for somebody who's over the age of 65 and has Medicare, but they want to have something that's like an add-on. They don't necessarily have to get the traditional. They can use this to be that. Or if somebody has pre-existing conditions or the other medical coverage through like the military, have someone who has military coverage but uses this so that they can go to any provider they want to, type of thing. So very flexible for somebody who wants to have the natural holistic stuff. And then the combination is both. This is what my family has. So we have major medical coverage, and then we have the holistic coverage, and still save $600 a month on our premiums while actually, using the policy. This is what's covered. So it's literally pretty much like insurance. It's not called health insurance because it's not regulated by the government like health insurance. That's why it's a health share. But again, there's no network. So you go to any doctor, covers accidents, emergency room, hospital services. There's the telemedicine for both medical and mental health. Care coordination is a department within the business or the company that we can use to help us if we have something that's major medical that is either planned or a large bill. Like if you are in the emergency room and you get that bill, the care coordination department is the place that helps us to process that claim, file it, get the best rates, type of thing. So, for example, I like to share this story. There's a gentleman who needed a hip replacement surgery, and he had the $5,000 annual max. Went to the doctor. His doctor was going to do the surgery at a hospital, and it was going to be $80,000. He contacted the care coordination department, had them look and review the file and everything. They went and did some research to see if there were any better options or more cost-effective options. They discovered that the same doctor also does surgeries in a surgery center, and the cost would only be $40,000 for the exact same thing. And so, of course, this person switched to do that. And because he involved the care coordination department, and they were able to find something that was savings that significant to the whole organization, then his $5,000 annual max fee was waived for that procedure. So he had zero out of pocket for a major surgery that he needed for hip replacement. So amazing, amazing way that it shows that they're here to help us and support us, but also keeps costs low wherever possible. So love that story. Um, it also covers pregnancy and postpartum. When somebody is giving birth, they can choose hospital, birth center, or home birth and have the same coverages. Home health care, pain management injections, hormone therapy, medical supplies, nutritionist. I mean, as you can see, this is quite extensive. There's all kinds of things that are covered. It's very much like traditional health insurance. Again, hospice care, weight reduction, skilled nursing facilities, durable medical equipment, so DME, if you've heard of that, lots and lots of things that are covered. So great program and things that people need that might come up with, medical issues or situations. This outlines the holistic coverages and what the specifics are with it. So as I mentioned, the part that I love is the essential oils and supplements that are covered and reimbursed from Young Living. And if it's an individual policy, just one person, then it's $50. If it's a family policy, it's $75 per month that is reimbursed on that. And it's open to anything as long as it's an essential oil or a supplement. It doesn't include toothpaste or cleaner or diffusers, those kinds of things. This plan has the primary care visits. It's up to 5 visits per year that are covered, up to $150 per visit. And then breast imaging. Another thing I love about this is that you can choose a mammogram or thermography. Thermography has less radiation. So it's something that I actually did while I had traditional insurance, and I always paid for it out of pocket because traditional insurance doesn't see it as a valid option or cover it. So one of the things that I like that I now have that flexibility to do that and choose that. And then the next, acupuncture, chiropractic, as I mentioned, on all these services, you pay upfront. So you pay like a cash pay patient, get your receipt, reimburse or send it in to be reimbursed, and you'd be reimbursed everything except for that first $35 until they've paid you $175 for each visit. IV drips, I haven't actually taken advantage of this one yet, but I need to. There isn't a place that's real close to me. I think the closest is like 35 minutes. But that's a monthly benefit that's reimbursed up to $100 a month. And then on this plan, prescriptions are also covered. So generic is $0, and then name brand depends on the brand because obviously there's so many of them that they're all kinds of prices. If somebody doesn't want the full holistic plan that we just looked at, there is a more cost savings option that has a lower monthly premium. Still comes with supplement and essential oil reimbursement. Instead of 5 doctor's visits, it is 3 doctor's visits. And on the chiropractic and acupuncture, it is 12 visits per year instead of the 24. This one doesn't cover the breast imaging, the IV drips, or the prescriptions. So a couple of differences and a couple of different options depending on what it is that you want or use. This one is the medical only coverage. So major medical, that was like if you big surgery or hospital visit, emergency room, that kind of thing. And so what you do on this category is first thing, you look here in the first column, what's your age group? And then what category do you fit under? So if it's for a family, let's say, I'll just show you like mine, a family with kids, and Garrett, it goes off based off of the oldest person that's going to be covered. Garrett's 47. And so we fall into this category. And we chose the $2,500 amount for our annual max. And so it was $560 a month if we did the medical coverage only. This one doesn't apply to us because we have both, but that would be an option. For example, like somebody who is 18 years old, a single person, if they want that 2,500, it's a couple $100s a month. Comparable, what I've seen with others is typically $300 to $500 for somebody in that same category, usually with a higher deductible than that. So it's usually pretty significant savings for just about anybody that I've done a comparison on. Here's the holistic only plan and its pricing. So if you're single, if you're a married couple or a single person with kids, or if you're a family with kids. I'm kind of pausing so that you can take a screenshot if you want to. Then the next 2 options are if you want the combination. So for example, this is oh, this is the holistic savings. So this is the major medical and the holistic savings. So the one with fewer chiropractic and acupuncture visits, not covering IV drips, not covering the breast imaging or prescriptions on that. But so this one is not the one my family has. I thought I'd had them in different order. But anyway, this one would, again, you look under your age group, which category you fall under, and then which of the annual max plans that you'd be comfortable with. I have another example. I have a guy, he's a single, well, he's married, but his wife is covered by her company and it's a really good rate. So he was looking only for himself. He's a truck driver, so he pays for his own insurance. He was spending $908 a month for a very high deductible. He's super healthy, hasn't been to the doctor in 8 years. And when he did go, it was because he got something in his eye, a little piece of metal, I think it was, metal or wood, while he was working. And so it was actually a claim, that was covered by the warehouse that he was working in to do a delivery. And so he was paying $908 a month for a plan that he hadn't ever used since he had had it. And he had got a notice that the rate was going to go up. And so I know his wife, and she reached out to me. She said, "Hey, can we look and see what you have?" So he's 57, falls into this range, and he is comfortable because he has this huge health savings account that has tons of money in it, like $30,000 or something. So he's like, I want the max. He's like, I want the lowest monthly premium, the highest annual max. I want to save the most money possible. So we took him down to this super basic plan. He is saving over $600 a month as a single individual. It's kind of crazy. So he loves the plan. He hasn't needed it, but he loves how much money he's saving because he's actually putting all that money away into his retirement and that. So he's pretty happy. This one here is the full holistic plan. So the 24 visits to chiropractic and acupuncture, chiropractic or acupuncture, whatever mix you want that to be, on those 24 visits total, and the medical. So this is what my family does. So ours is 920 a month, and then we add on vision. So I'll show that on another screen because if you remember, not that you remember, but back on a previous screen, our rate is a little higher. Monthly premium is a little higher than 920. I think it's 955. So that's an add-on to do that separately. So I'll pause for a second so you can take a screenshot if you want to save this. I can also send you the recording later. That's why we record it, so you have that to refer back to. So one of the things I like to point out is that on the family annual max, it's not necessarily per person. So if you have 7 people in your family, it's not $2,500 for every single person. When you have a family, the maximum for everyone, no matter whether it's 3 people, 5 people, 10 people, you're not going to go over $7,500 in a year. So that, and I should say whether 3 people, if it's, well, yeah, if it's two, so it's a member and children, then it's lower. But these categories, I like to point that out because again, this is something that's super different than traditional health insurance. With traditional health insurance, you have that individual amount for every person, and then you have an amount collectively for a family. But individually, it's every single person. So if something happens, some sort of accident, auto accident or something, that the whole family is in the vehicle, you can have pretty significant out-of-pocket expenses. This is still significant, but it's less. So I like to point that out. So here is the vision and dental. You can get those as individual add-ons or you can get them combined. We actually kept our old dental plan because I think the premium was within $5 a month. And I think my daughter might need braces and the orthodontic coverage with our old plan was actually better than this. So I do like to point that out depending on what you currently have. But I have a few people who have switched over depending on what they had previously. And then I've had a few people who have a lot of savings monthly on their premiums. So they actually just put money away and didn't do either of these plans. So we can always look at it and talk about it. Cool. So how does it work? What are the specifics? So it's a Young Living supported plan. It's a partnership with Young Living and Clearwater for these prices and these coverages. So first thing that you do, if you don't already have one, is set up a Young Living account and become a customer with Young Living. And then everything else is really administered through Clearwater. So we sign up for the actual health plan through the Clearwater portal. They have all kinds of education and information. You have a login online. They process the premium for the monthly payment. They do all the administration, reimbursement. That's where you submit receipts. If you do have a medical need, that's where you open a claim with them and get the support and help from the department that takes care of that within that part of Clearwater. And then what's the timing? So the timing and the specifics of the plan is that you set up your account and it can be active on the first of the following month. So if you did it today, it could be active on August 1st or any month after. So it could be August 1st, September 1st, but it's always at least the first of the following month. When it's active on that day. So if you were to set it up for August 1st, then your first premium doesn't get charged until the 10th of the month, but your coverage starts on the 1st. So you could actually start like buy your oils and supplements before you even made your first premium, have it submitted, your online portal is active, and be ready to get that reimbursement. With the receipts and the reimbursement, you do need to send those in at least within 30 days. So I actually have a little reminder that I send out that I set up on my phone to send out to people and be like, hey, have you done your reimbursements, all of them for the last 30 days? Because you want to make sure, obviously, that you're taking full advantage of all of the coverages that you have and you get. So thanks for being here. Um, I always like to share that if somebody else referred you or recommended you, want to make sure that we know that when we get you set up because we are a referral company and you would get, or the person would get benefit and could help pay for their monthly premium when they refer other people. So something to think about. Also, maybe be thinking about who do you know? Some of the most common people that I help get set up with this to save a lot of money is business owners or realtors. Somebody who is a real estate agent, click out of that. Somebody who's a real estate agent that does real estate full time and doesn't have another job, this could be really, really good for them. So they're probably spending quite a bit of money on health insurance, and this can save them money and in most cases give them better coverage. So I will open it up to any questions. We are, I think, got 27 minutes. I like to keep it below 30 minutes to respect your time. So if you have any questions, you can unmute, let me know those, or you can also share them in the chat. So I know that's a lot of information that I talk about in 25, 30 minutes. No questions? I guess that means that I covered it all really well. Oh, there is. I see it in the chat. Okay, let me click on it. Oh, no questions. Okay, you're just saying thank you. I appreciate you coming. And I will send you the replay probably tomorrow, Leah, just so that you can watch it and have a refresher and maybe even watch it with your husband if he needs to, or if he wants to look at it and listen. So thanks, lady. Appreciate you being here. Have a good night. All right. Stop the recording. Can't get the recording to stop, Vince. Oh, it's because